Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice.
G'day and welcome to the latest episode of Vantage Point. On today's podcast we have Duratec, who's an engineering, construction and remediation contractor, and we're also on the podcast some 6 months ago. We're joined by their Managing Director Chris Oates, who runs us through the latest results and key milestones. Okay, Chris, welcome back to Melbourne. I think it's been bang on 6 months since we last recorded the podcast. The stock's up probably 10 or 15% since then. You've just delivered another record result with FY24. I think it's revenue CAGR of sort of 32.5% since you first incepted FY 2010.
Yep.
Can you just talk to us in terms of what were the key drivers for the growth in FY24?
Yeah, we've had a good year. We say it's a good year, not a great year. Drivers, so mining was up, well over what it was in FY24. So, in FY23. So it has been a really good year there. Defence was down a little bit. It's probably going to be flat again, but we've got some unbelievable opportunities there. So we're expecting that to pick up again. So building facades had a really good year.
Yep.
So we've just finished Central Park, which has been fantastic. One of the biggest jobs we've ever done as a company, and definitely the biggest in building and facades at 64 million. So just finished it in August. Fantastic job, yeah. Lots of other building facades jobs, by the way. So added to a real good FY24, and the future for that area is great. Energy's kicked off. It was down a little bit this year, but that's expecting to bounce back really strongly. We finished up Western Sydney. Most of that was in the year before, in FY23. So 24 was good for energy, but it's looking fantastic actually as well. So, really happy with the year. But, we're looking forward ahead to 25 and beyond.
And just when you look back at FY24, is there any sort of challenges or headwinds that you can sort of call out?
We're running 1,500 jobs, so you're going to have some challenges here and there. It's always just managing them. So on the balance of it, I'd say there was nothing significant there, but you're going to always have that within each one. So in each sector, that is. So nothing that worried us, but always challenging. It's good fun.
What about in terms of contract award delays? There's probably a few there.
Yeah, that's just probably part of it too. Yeah,
Yep.
and I guess that is a bit of a challenge. And it's one you can't control. So it's not as we don't sort of focus in on that. What we actually are really concerned with is, are we going to win this job and are we best placed for it? So the timing of it's a bit outside of it. So. Yeah, that did what we would say is we never really lost too many of them. You always lose your fair share, but the ones we really want have been pushed right. And that's probably why we can say quite confidently that defence is going to grow in the medium term quite strongly, we think. So, you're dealing with that. And one other point, people probably look at the overheads in conjunction with that. And we did, earlier on in November, we predicted that we would probably be what we thought was around 600 mil rev, and we weren't. So we sort of geared up for that, and we only delivered 555 in the rev. So really the overheads are sort of well placed to, we think, grow that business,
And in terms of defence, so obviously those that might have been delayed in FY24, they just roll into FY25 and beyond, so it sets you up really.
Yeah, so we have picked up the medium-sized jobs, which and people pick that up themselves on Oz tenders. So this is for defence. So they help populate 25, probably the second half as well. So anything we win now, for FY25 sort of has an impact more in the second half. So we see the medium ones coming our way, at their fair pace. The bigger ones are still, as we corralling them or whatever the right word is, but there's a fair few of them in ECI mode. So. We really like those opportunities because when you win the ECI, you're associated with that job the whole way through. So you understand it exceptionally well before you sign your head contract.
And maybe if you could just expand, I know there's some sort of education around ECI, but what is it and why? Why is it such an advantage for you guys?
And ECIs are different in mining space to building and facades to defence. So in the defence world, if you could say, if you get inside the job, I guess at 30% design, you can actually help the designer design. So bear in mind, we don't design, but we help do the constructability review. So we'll go to the market. If it's subcontracted, we'll understand, who wants to price it, what the prices are. We'll put it all together. We understand how to scaffold perhaps it out. We understand how to get maybe the steel-driven piles if that's what we're doing in a defence space. So you have all the ingredients ready to go and you understand every element of it. You have the price together. So the idea there is you get to the end of the ECI or the end of the design and you know everything there is about that job. You know all the stakeholders. And bear in mind there's probably 100 stakeholders, if you could say by people numbers, all over the country. And so what that is, it's a massive advantage to the client.
It's almost a bit of an unfair advantage for you guys as well, isn't it?
Yeah, but what they do too is the competitive spirit that's always there is done prior to the ECI. So really what they're saying is that at that 30% design, they'll go to market there and find the most appropriate contractor. You always get tested as well by a QS on the client side. So they don't go to the market generally. They'll just go to QS or some cost consultants to make sure you are providing value for money. And so, and when we actually do these, and we have done, Central Park was one of these in ECI. You get to the end of the project, and you'll find an extremely happy client. Contractors delivered a really good project. It's safe. It's got the highest quality. So it actually is a win-win all around. It's genuine, and it's why people are going that way more and more.
It's a good way of doing business by the sound of it.
Yeah, and just there is a difference between defence ECI because they're actually after constructability, programming, costing, whereas some of the miners and the building operators, they're more trying to understand their asset. So that's where we'll have MEND more involved. So we'll do 3D reality models. And at that point, they're trying to work out where's it corroded, where are the faults, where are the weaknesses, and then we'll help them work our way through that. So it's different. They're still ECIs.
Just different elements to it.
Different elements to it,
And you announced recently a big Woodside contract, obviously in the energy space. Can you just talk through the significance of that?
Yeah, really happy with that. We did work for Woodside in a previous life before we started Duratec. And what Woodside is, and probably all those energy providers, there's ultimately a lot of capex in what they do onshore. This is so, and it's all around in and around sort of the ocean. Effectively, so it does corrode a bit. We can assist in corrosion control. That's of steel elements, concrete elements, etc. So what we do for the miners works, that blue collar workforce that we have is really, the same type of work that we can apply into the energy sector. So for us, becoming a vendor to Woodside is really good. So this first parcel of work at $22 million is a good start. We think there's a lot more to do with them, and for many years as well. That along with the work we do for Impex, Santos, and
so the energy space is you expecting to drive decent growth FY25 and beyond.
Absolutely, yeah. We can say that pretty comfortably. So of all the things, energy we can say comfortably is going to grow strongly. And DDR, with their win recently as well, plus that purchase of RC Construction allows them to have a really good look at 25 and
just talk us through DDR and also the contract win there. What is DDR and your relationship with them?
So DDR is the associate company. We own 49% of that, along with Tom Hutchinson, who owns 51%. It's set up in NT. It works in NT, works around Australia. Its head office, effectively, it's headed out of NT. So we've had that company together with Tom since 2017. It's just a fantastic business. It's our Aboriginal engagement is phenomenal. Employee numbers is great. We purchased RC. That's got a lot of work ahead of it, and this project we won recently at 54 million, pretty significant. That
was a record, wasn't it?
Yeah, record. By far a record size project for DDR, and it's in and around NT. And that Project Phoenix is what it's involved with. There's a lot more work, in that project or program of works as well.
And if we dovetail into defence, what's the sort of outlook for FY25 and the recent, obviously, Garden Island was pretty significant as well. What does that sort of look like going forward?
Yeah, Garden Island's really interesting. It's there's a lot of work coming because we, Australia signed that AUKUS deal between the US, UK, Australia. So, and there's touted to be 2,000 mariners based around Rockingham. So at the moment, that's the tagged location where the nuclear-powered subs will be housed on behalf of Australia. And so there's this big, program of work. They've touted $8 billion to be spent there. So we've been there for close to 10 years now doing marine structures. We know there's a lot more marine structures to go. They are ECI head contracts that are coming to market. So we think we're pretty well placed for that type of work and add value to defence. So, we've put that out there. I think if you add up Parks Wharf and there's some work at Diamantina, it's circa $600 million worth of work in the DEJV. Bear in mind we're 50% of that.
Yep.
And that's a joint venture between us and Duratec. So if we look at that, that's a lot of work. And for us, we've only allowed $10 million in FY25 as far as revenue goes, which isn't much.
Yep.
So what we're thinking and probably saying by that is this is really a 26, 27 story.
Yep.
And there's a lot of other work on that island as well. It's not just, those maritime structures. There's a lot of other things coming to market that we think, we can do.
Yeah, and if we move on to mining and industrials, it was huge growth in FY24 over 23. What does that look like, and is it different sort of line of work to the rest of the business?
Yeah, it's a lot of MSA work. So you'll see that MSA slide.
What's an MSA, sorry?
Oh, yeah, Master Services Agreement.
Yep.
So it's like, basically once you start working for a miner, and energy's similar, so is in the sense that you get a contract, you have some hourly rates. It's often easier just to do a do and charge environment because you've got so many factors, working factors. So you get delayed and stalled, for in a 12-hour day, you might, through various circumstances, you might only do 7 or 8 hours worth of work. So you're better off doing it on a scheduler rates. It's fair to the customer, fair to the contractor. So we have a few of them set up around Australia for that matter, but the miners do a lot of it. So, that side of the business is strong, and most of that MSA work is around mining. We think we're going to grow a lot of that in energy because they've got the same issues, right? You're in a live plant, so MSAs are really the appropriate way to do a lot of that work. And that tends to be the way it is. So,
and MSAs, do they feature in the order book? I know there's a fair bit of focus on the order book, but do they sort of pop it in the order book, or what do they look?
They don't feature in there.
Yep.
So they sit outside of it.
Okay.
So if you look at what we put out there at $405 million of work on hand, that is, the work on hand that is contracted work. So MSAs, we don't account for them. We know we're going to get a lot of work out of them. So rather than point to the future about what it is, we point to the past to say, hey, we did $145 million worth of MSA work.
Because it's roughly like 25% of your revenue base was MSA last year.
Yeah, so another thing we would say or have said about that is that, 25%, we have consensus out there saying we're going to do 610 million rev.
Yeah.
If you apply 25% to that, it's a good starting point.
Yeah.
Maybe that can uptick a bit if we can get a lot more of that work. But that's how the mining industry generally works. There are lump sum projects with, qualified lump sum projects in and amongst it, and we do that where we understand the scope and it's isolated and it's not affected by operations.
In terms of the annuity style contracts, that's not the MSAs though, is it?
Annuity style.
Yeah.
Yeah, it is. Yeah, they're often described as the same thing.
Yeah,
so people say annuity style or MSA.
Yeah.
It's really all do and charge type work.
Yeah,
that's another way we describe it as well.
And so if we look at MSAs, they're in type of annuity style sort of contract. How do they look from a gross profit, margin profile versus the remainder of Duratec's revenue base?
Yeah, they tend to be better than average. So bear in mind our average gross margin is 17.2. So annuity style or MSAs are generally 20 something. A bit of that is to do with the equipment we hold as well.
Yep.
So the equipment actually comes in more the overhead as a depreciation charge. So tend to be, the mining side, and energy will as well have a lot. This is compressors, air receivers, blast pots, spray pots, all that type of stuff. So that tends to be the average mixed margin in those areas.
And so when you look at the order book, obviously 25% of your revenue base last year was made of MSAs, which is more profitable than the remainder. It's pretty decent upside in terms of depending on how many MSAs you can win in FY25. Yeah. It's a good sort of blend.
Great blend, yeah. I mean, if in time we can lift that as well. The other thing, it doesn't come with bank guarantees, and it does have a slight negative effect on the cash flow, but that's only short term because you pay everyone weekly. We pay weekly. You get to the end of the month, then you bill. Yep. But it's when it's better margin, it's all a good thing. So,
and I think we saw that in terms of the cash conversion last year as well.
Yeah, we did bounce back quite nicely there as well. So MSA work is definitely something we'll target, and we think we're pretty good at as well.
And in the latest result, you talked about the order book of roughly 405 million.
Mm-hmm.
How many, is there small to medium jobs included in the order book as well, or how do you sort of look at that?
Yeah, it's a point in time, that cut. So,
Yep.
if we cut that 4 times a year probably or something, you've only got what's there at that moment in time.
So it's almost like a bit of a misleading metric.
Yeah, I guess
One way or
overall
another.
it can probably be
Work,
okay, but
yeah.
it's not something we've focused in on ourselves. Obviously, the market sees it differently, or
Yep.
they absorb that a lot stronger than what we will. So, but we have small and medium jobs. Like if we did another cut on that in 3 months' time, we would have a whole lot of things we would have actually found, priced, delivered, invoiced, gone.
And when you
never
talk
seen.
about small to medium, what sort of size?
Yeah, we're sort of indicating now medium is 5 to 20 million, I think
Yep.
we sort of said. But really, like one stat we pulled out, we had 900 projects. This is one under 200,000 in
wow.
I think it was calendar 24.
Yep.
But it's going to be the same type of stat throughout. Maybe that grows a bit, but we really like that because it's a bit of diversity for
Yep.
small, medium, large jobs.
So, Chris, if we look to FY25 and beyond, what excites you the most? Obviously, you've got the order book there. Obviously, there's defence, mining. There's a number of key drivers going forward.
Yeah.
What's sort of the most exciting that is really going to turbocharge the business over the next few years?
Yeah, I think you still got to go to defence for some of the size projects, and like in Western Australia, they've got a lot of feature around the AUKUS deal.
Yep.
So the American nuclear powered sub was in town with the Americans on board, and they get on the radio, get on the news, and so there's a lot of features. It is pretty interesting and pretty exciting for I think what's going to happen there for the whole of Western Australia. I think it's a good economy booster for sure. It's certainly interesting. So I think that is going to be really turbocharging our results, I guess, and revenue right through for the next. And if you actually look ahead, like they look to 2040 as far as this programmer works. So we think we can be a big part of that, no matter what they do for the infrastructure side. So that definitely is exciting. And I think energy is the other one that and that's going to be an FY25 and beyond story. So the things that we're doing there, we're coming off a pretty low base, of 40 odd million rev. That that's a huge growth potential for us.
And when we look at FY25 guidance that is out there from an analyst perspective, how sort of comfortable are you around consensus? I think it's sort of 610 million. And naturally as a company, you've always been a bit cautious and conservative in terms of outlook. Yeah. How do you sort of look at that?
We're very comfortable with it. We've said that, I think on the webinar we said that as well.
Yep.
That was, we call it 610 and 52 EBITDA. So, we're very comfortable with that. We still got to win. People probably want to see, and we do as well, the populating some work into the second half.
Yep.
So, and that something like Woodside's really good for that. Obviously, DDR's doing their thing as well. We don't, that's not our revenue.
Yep.
That's down the bottom line. But really, we see it as a pretty, as a good target.
Yep.
And something we can grow into. The conservative side, we are always conservative. Last year, we went out in November, and said 570 to 610 rev.
Yep.
We didn't get there. So it's not often we don't do that, but really what happened, that's a feature of some of those delays.
Yep.
So that's fine. We're not, we try to tell it how it is.
Yep.
At each point in time. So that's, so we're comfortable.
It sounds like there's a number of tailwinds to come in FY25 and beyond. The business is in very good hands with you at the helm. Good luck for the future, and thanks for joining us.
Yeah, awesome. Thanks, Simon. Thanks for having us.
Cheers. Thanks, Chris.
Cheers. Thanks, mate.